welcome back. Today we are planning to solve one problem from um, financial statements of banking company, and this is one type of problem from the chapter. There are other some models also there which will work out on upcoming days. Now we'll try to understand what's the non-performing asset and the performing asset problem. This is kind of problem like that, non-performing asset problem, non-performing asset. Okay, and before getting into the problem, let's get a clarity about uh, this banking, how the banking is working, and how the non what is non-performing asset and what is performing asset. Those things and all we'll slowly get into. Okay, how the bank is getting money? Bank is getting money from the loan giver, which is the account holders. Account holders give money to bank by the way of minimum balance, FD, RD, and any kind of deposits they are given to bank is a loan to bank. This is the liability in the books of bank. Okay, then what about the loan given to customers? Loan given to customers is the asset in the books of banks. Okay, this is the asset for the bank, and for the loan given to the loan taker, the bank charges interest. For example, interest at 10 percentage, and bank pays the interest to the loan original loan givers, to the ultimate loan giver, to the bank is loan account holders, right? For them, the bank will give 7 percentage interest, 8 percentage interest, or 6 percentage interest, some kind of amount will be given to the loan giver. So this is how the bank works, and the difference of interest is the income for the bank, right? So okay, now there are two kind of assets. We came to know that loan is the asset for the bank, right? Now asset in the bank can be divided into two parts, which is performing asset and non-performing asset. Okay, performing asset. Okay, what if the performing asset is paying interest to the bank, right? So mostly we'll give loans to the merchants, or the new business startups, or business or personal loans to the people. So whatever the loan we give, for the interest due, has been written as loan account debit to interest. This is the income for the this is the income for the bank, and this is the asset value. Okay, actual asset. For the asset, we are for the this is the most like debtors kind of thing. Okay, so this is the asset balance, and for the asset we are receiving the income from the merchants or the customers. Okay, so we are showing the due account, we are showing the due entry in the books, and then how can we show the due entry in the non-performing assets? Okay, loan account, same entry, loan account debit to interest suspense. We are suspecting that they won't pay, or there are some doubtfulness in this interest receiving. Okay, so they are putting into the interest suspense account. This is also income only, but they are doubtful income, not these are doubtful income and the doubtful potential income for the bank. Okay, so same like this is the asset and this is the interest part. So we are not directly showing the interest, we are showing interest suspense account there. Okay, what if the interest is received with actual installment? Okay, actual installment or monthly installment, right? Okay, what could be the entry for performing asset and what could be the entry for non-performing asset? For non-performing asset, we are receiving cash. Sorry, for performing asset we are receiving cash account debit to loan account, right? So we are receiving the cash for the loan we gave. Okay, we are receive the interest and amount, both will be here, principal plus interest, both will be in this account. We are receiving the both in the collective amount as a cash here. Okay, and then same account here, cash account debit to loan account. Okay, what about the interest recognition? We are recognizing the interest here itself, so there is no entry here, so this is nil here, that is not applicable here. And then what about the non-performing assets? So non-performing assets, they mostly won't pay the entire money, or some rare cases they will pay. Okay, if they pay the entire interest, then the entry will be interest suspense. Whatever we have transferred to interest suspense account, debit to interest received. Okay, interest account, if they have paid the full amount, then this is the entry. If they have not paid any amount, we have to reverse the loan account. Okay, for example, if the merchant if the merchant has to pay 100, but they have only paid interest of rupees 70, and they have not paid the interest of 30, but we have transferred the entire potential interest receivable from the merchant as 100 given here, but only 70 uh, received. But we have to show the entire for reason, but we have to balance the entire 100, right? So we have to reverse the account by 30. Okay, so this is the entry. I hope you guys understood that. I understood this entries the purpose. First, we are showing the due entry, but here we are showing the due entry, but in the interest suspense account, because these are doubtful interest. And then we are receiving the principal and interest, so cash account debit to loan account. And what about the interest recognition? So interest recognition is only here, because we are recognizing the interest here itself, but we have unrecognized interest in some part. Sorry, we have to recognize the interest part in the different entry, because we have split the interest part into interest suspense account, the new account, no, the dummy account. So the interest suspense account has been debited in the journal, and then the whatever the interest we received from the uh, merchant, that has to be placed here, and whatever the amount not received from the merchant, that has to be reversed to balance the account. Okay, right? So let's get into the problem. Okay, what they are saying is, 1 minute. Okay, so when closing the books on 31/3/23, unsecured loan is rupees 2 lakhs, and then in the account of merchant whose financial condition is reported to you as, okay, is this is bad and doubtful. So what this actually denotes is, this is non-performing assets from the bank's perspective, and the interest has to be paid from the merchant is rupees 20,000 for the year. Okay, on 31st 3. Okay, how would you deal? Okay, entries for 2022 to 23 has to be cleared during the year 23 to 24. 75 pays in the rupee, which is 70%, 75 percentage, 0.75. Okay, that has been paid by the merchant. Okay, how we have to address it? So we are going to show the 2-year entries for the non-performing asset, right? Okay, journal entries in the books of bank Okay, first, there is an unsecured loan of rupees 2 lakhs and the interest of rupees 20,000. Now we have to put the due entry, and before that, in the question itself, they have directly asked that this is the interest suspense account. Okay, anyways, we are going to create an interest suspense account for non-performing assets. Okay, let's start. Okay, first, loan account, date is 31/3/23. Okay, 31/3/23, right? Okay, loan account debit to interest suspense, which is 20,000 and 20,000, right? Due entry. And we haven't received any money on that year, on that particular year. So we have received the money from them on 31/3/2024, right? So on the day we have received the 75 percentage amount from the merchant. So cash account debit to loan account. How much we have received? We received 75 rupees in account of the total debt due up to. Okay, working note, will let's prepare the working note. Principal balance is rupees 2 lakhs plus interest payable is rupees 20,000. So 2,20,000 into 0.75, which is 2,20,000 into 0.75, which is 1,65,000 we have received from the merchant's loan account. Okay, the calculation is, yeah, working note. Okay, now, so and we have settled this account, right? So what's the, how much amount have not received from the data? 31/3/2024, we have received 1,65,000. How much goes to principal and how much goes to interest? Okay, let's split it up and find out that 2 lakhs is the principal, 20,000 is the interest rate. So 0.75 into 0.75, which is 2 lakh into 0.75, which is 1,50,000, and then 20 lakh into, so 20,000 into 0.75, which is 15,000. So the merchant has paid 1,50,000 as the principal, and then 115,000 as the interest. So we have received the interest of 15,000 and principal of rupees 15 lakh. So what's the bad debts here? Bad debts account debit to loan account. Okay, which is 50,000. Okay, why we are not including the interest here? Because when we are recognizing the bad debts should come only from the principal amount, not the interest amount. So we are taking only the principal outstanding of rupees 50,000, and we have written off as bad debt, right? So which is okay, let's mark the working note here. Okay, now 31/3/24. Okay, what's the interest has been, what amount of interest has been received and how much has been not paid by the merchant? Okay, in the interest suspense account, how much we have 20,000, right? To interest, as a income we received only 15,000. Okay, balance we have 5,000. How we have to recognize it? As I already told you, we have to reverse the loan entry. See, so we are reversing the loan entry of rupees 5000, right? So that's it. We can transfer the interest amount to the P&L account. Interest account debit to P&L, which is 15,000 and 15,000. How we can recognize in the books, in the ledger book, in the books? Okay, loan account. This merchant loan account. Okay. Okay. What's the merchant's balance on 31 3 2023? This is 2 lakhs, right? 31 3 23. 2 balance brought down, which is 2 lakhs. Okay. What, and then what's the first journal entry, which is to interest suspense account? On we have recognized the interest as the doubtful interest, so we have transferred the entire interest to interest suspense account. So we have recognized through interest suspense account to interest suspense, which is rupees 20,000, right? On that, here he hasn't paid anything yet, so we are closing the balance by balance carried down, which is 2 lakh 20,000, right? 1 4 23 to balance brought down, which is 2 lakh 20,000. So on 31st 3 23, he has paid rupees 1,65,000, right? See, 1,65,000. 1,65,000, and then we have recognized the bad debts of rupees 50,000 by bad debts rupees 50,000, and then 5,000 as interest suspense account. We have reversed the entry 5,000, and then it's tallied. Okay, that's it. Let's go to the interest suspense account. Okay, now where it all started, it all started on 31 3 2023. Okay, by loan account, which is rupees 20,000, right? We have received the first interest amount, which is rupees 20,000, right? To interest to loan account, we have recognized to balance carried down, which is 20,000. That year is over. One 4 23, which is by balance brought down, which is rupees 20,000. 31 3 24 to interest we received rupees 15,000, right? And then for the amount which we have not received, we have put it under loan account. We have reversed the loan account, which is 5,000. That's it. This is also over. So very simple sum, and this can be asked for 7 marks in exam, and only 4 entries, which is the first one is due entry, receivable entry, bad debts for the amounts which we have not received in terms of principal, and then here we have interest suspense account, how much we have received in front of interest, and how much we have to transfer, okay, to P&L. For the working note I have given here, so we can use that. And then the ledger is very simple. We just we just split the journal and put it in the loan account and interest suspense account. The problem is over. Thanks. We'll see with another new concept tomorrow. Thanks.